First idea, Amgen. Gord, take it away.
Yeah, Amgen, of course, is the granddaddy of the biotechs, and I can remember 25 years ago owning this stock on behalf of clients, and it was, of course, well known for two blood therapeutics, Epogen and Neupogen, and much has changed. It was a great company then; it is a better company now. A very, very deep bench of drugs. They just recently bought a company out of the European area called Horizon Therapeutics. They paid $27 billion. It's going to add some growth to this company, even though it had decent growth. It's got very, very strong financials. Pays a 3% plus dividend yield, and it's well covered. It's about a 42% cover ratio, so well covered, and they've increased their dividend by on average 11% annually over the past 5 years. So we're quite excited about owning this company. We think that there's a combination of income opportunity, stability, and as a kicker, some growth that hasn't been fully recognized or priced in because of this purchase of Horizon Therapeutics.
Okay, we've got Deere and Company as your next idea. Is that a play on higher crop prices, Gordon?
Well, crop prices, of course, Andy, have been very strong, and we think they'll continue to be strong. Much of the soya and corn crops in the United States that are harvested do not go to food production. They go to production of petro products. And there's, of course, a growing food issue with the issues that we've got in Ukraine. There's a lot of opportunity for farm prices to rise, but there's more to it here than just that. Deere is trading in the mid-teens on a valuation basis. The machinery cycle, we think, is pretty much mid-cycle, but they're adding a lot of technology. Precision farming is becoming a term that you're hearing a lot of, and that basically means that Deere is using technology to increase yields because their equipment are really just giant computers, and they will help farmers increase yield in their planting and harvesting cycle. So we very much like this company. We think that it gives you a great opportunity to get into the machinery business. The other side of it is their forestry and construction business, which is going to do very well because of the infrastructure bill that was signed, a year and a bit ago. $1 trillion really has yet to be spent, and Deere is going to get their fair share of that. So we think a good opportunity here and timely.
And finally, United Rentals.
You might remember, Andy, I've talked about United Rentals over the years. We've owned it for quite a number of years. In our U.S. small cap portfolio, it's done extremely well on behalf of clients. Although a bit of a high beta name, it's going to be volatile. That's just the nature of the business. But it trades at about 10 times earnings at these levels. Has a 10% free cash flow yield. Again, I mentioned with Deere the opportunity to take advantage of the infrastructure play, and of course United Rentals plays directly into that. And regardless of the backdrop, whether we have a shallow recession, a deep recession, no recession, there's money to be spent. It's already been allocated, and it is to be spent. So we think that there's a lot of safety in that. They most recently bought a company for a couple of $2 billion called Ahern, which will be additive or accretive right off the get-go once it is consolidated. So that'll be additive. So we feel very strongly that this is a good long-term hold on behalf of clients.
And Gordon, just tell us, people looking ahead to a recession or a potential growth slowdown, let's say, but the market could well tend, history would suggest the market will bottom before that recession works itself out?
Well, that's been the history. You know, the market tends to bottom well in advance of the end of a recession. And once we end a bear market, Andy, markets grow disproportionately high, so strongly. So, you know, if people want to go back and look at our Goodreid gauge that we wrote in the fall of 2022, by going to our website, goodreid.com, Insights area, just sign up, no obligation. Read some of our past research. We talk about what markets do once a bear market has ended and we move into a new bull market. People will be surprised that you don't flatline coming out of a bear market. You tend historically to have very sharp advances, and that of course is great for the future.